Good afternoon, everybody, and welcome. Thanks for joining us. My name is Tim Graham of hotspotting.com.au, and I'm delighted to be your host for today, where we're going to discuss ways to create positive cash flow in a high interest rate environment. My special guest for today is none other than Zen Christophe. Zen, thank you very much for joining us today. How are you?
Good, thanks, Tim. How are you doing today?
Really good. Now, Zen, you're obviously Chief Operating Officer at Reventon. How are things at Reventon at the moment? How are you finding it?
Well, in this environment, Tim, I think with interest rates and the welcome news that we had just a few days ago about rates being on hold, that's obviously been great for prospective investors and home buyers. So we've had a great year considering what's happened over the past 15 months with rate rises. But we're really getting some positive results for a lot of our clients, and we'll go through a few of those results today, Tim, and be able to sort of discuss things going forward with that as well.
Terrific. Well, I suppose on the interest rate front, we're still sitting in cash rate about 4.35, and what it was at the May 2022, they started going up. We're at 0.1% with interest-only loans for investors floating in the threes, and now we're in the 6%. So, obviously finding locations for investors that have got positive cash flow and higher rental yields has become incredibly important now in the high interest rate environment. So, are you finding now, investors are starting to feel there's a bit more certainty in the market?
I've found that probably over the course of the last quarter, people are feeling a little bit more confident about the market, a little bit more confident about entering. Prices have been pretty stable, which is good. And people are getting a good understanding now of what their living expenses are, as opposed to what it may have been previously over the course of the last 6 months with a bit of uncertainty with the rates continuing to rise. And I think the flow-on effect with something like that takes a little bit of time. And as it takes a bit of time for them to understand, all right, well, this is our current assets and liabilities. This is our affordability. This is what we can spend on a weekly, monthly, fortnightly basis on incidentals and things like that as well. It takes the consumers a bit of time to get a grasp of that as well. But I think probably in the last quarter, people have started to come to grips with that and get a bit of an understanding to what things are necessity spends and what things are discretionary, and the things that they can sort of cut back on and things like that as well. But I've found that when it comes to the investment market, people actually finding that a necessity spend these days, and allocating specific amounts of their income to put towards retirement planning and things like that as well. So one thing positive to come out of, I suppose, a lot of rate rise increases.
If there is such a thing.
People have really scrutinized their spending, and
Yeah.
they've got a better understanding to, I suppose, where the money's coming in, where it's going out, and
what's important.
what's important and what's not. So if there's anything positive to come out of that, it's probably put a bit of a microscope on Australian families and their spending, and a lot of things like that. So people.
Well, we had it, as they say, we had it too good for too long. It was, very, very low interest rates for some time. And that's where you got to make hay while the sun shines, so to speak.
I think what people have to understand was something that it was unforeseen. It's something that hasn't happened I've been in the industry for over 20 years, haven't seen anything like that previously. And people were a little bit conditioned to those sorts of rates. And they were, listening to different economists, politicians talking about, okay, rates aren't going to move and so on and so forth, and really taking some of that information as gospel. But what a lot of people that have been in the industry and understand, I suppose, a little bit more about politics and things like that as well, that not everything that you hear will come to fruition. So you have to, you've got to plan for things to change. And that honeymoon period, whilst it was great while it was happening, the reality was at some stage there was going to be movement.
Well, no different to what we're about to see now. We had, 3 out of the big four come out yesterday with their expectations on what the future of interest rates look like. I think ANZ is expecting 3 interest rate cuts next year in 2025. However, the other 3 have all said they're expecting interest rates to start to be cut from November onwards still. So that's a promising sign for homeowners, especially that they'll see some cost of living pressures start to reduce if we do get those rate cuts later in the year.
I think some of those comments, what I think the areas that we need to highlight with things like that is you need to keep informed. The market and conversations are constantly changing.
Yeah.
So just being able to have access to that information, being informed, being prepared, and understanding that some of those things may come to fruition, some may not. Planning and preparation is obviously key when you're talking about and looking into information like that as well.
Yeah, exactly. Now, Zen, I know you've got a presentation for us today. Did you want to share your screen so we can jump into it?
No problems at all, Tim.
Terrific. Okay,
Excellent.
we've got you.
Okay, fantastic. So, obviously, Tim, just before we do get into it, we'll give you a bit of to some of our viewers who haven't heard about Reventon previously, just a little bit of an understanding about the organisation and what we do. So, we've been established for almost 20 years now. We've helped thousands of families enter into the property market. We've spoken to them about how to build wealth towards retirement, predominantly through the property market. But we have a holistic financial services organisation. So we're able to talk to clients from A to Z when it comes to property investment. And it's something that myself and my family, my brother, who's obviously the CEO of Reventon, have been heavily involved in for the past 20 years. Myself personally, I started my investment journey back in the early 2000s and got into the investment market in about 2005, where I was doing what we do here at Reventon and assessing people's assets and liabilities. So collectively, between myself and my brother, we've been able to help over 5,000 Australians enter the property market. And there's been notable changes in the time that I've been involved in the industry. And I remember when I first started seeing people back in mid 2000s, we were talking to people about median house prices in the mid 200 ranges, and
Yeah.
looking back at that now, and I remember people saying to me, "Oh, look, I think that's a little bit expensive. I'm not 100% sure about that. I'm not sure if I want to get into the market at the moment." And we could only go by what history had shown us previously to talk about obviously median house prices and how they've changed and things like that as well. But looking forward now, 20 years of industry experience, seeing so many different people across Australia, obviously not only here in Victoria but across the country. With some of those comments we still get today, but understanding that the median house price has grown significantly. The rates, as we spoke about previously, have changed significantly in the past 15 to 24 months as well. So understanding, looking at investment, not just in a capital growth sense, but understanding to look for investments that are going to develop a good rental yield and are going to be able to run themselves with obviously different incentives that we have here in Australia, given by the government for people to enter into the property market, has become more important now than it has ever been in my time in the industry. So we did want to talk today a little bit about the importance of investing in properties that are creating positive cash flow. So today we're going to highlight some areas that we've been looking into, and obviously talk about the importance of data, the importance of research and things like that as well. So I'm sure we'll have some questions at the end of our presentation as well. So I'll be happy to answer any questions that the viewers have. But I think now more important than ever, and we have access to so much information. And we're flooded with information. We do searches. We're targeted for different searches based on the things that we're looking into and things like that as well. But I think understanding that there is credible and reliable data sources is really important. And being able to decipher, well, what are some of those credible and I suppose important um, areas to get that data and research from is really important. And I've always been a student of learning about investment property. It's something that I've been doing for a long time, something that I saw my family do as a youngster in my late teens. So it's something that myself and my family, we've always had a keen interest in.
Mm.
But I think now with the access to information, really understanding how to,
It's yeah, that access to information, it's a lot easier to get, but it's a bit of an analysis by paralysis issue at the moment for a lot of people as well. It's where do I look, and then how do I actually interpret that data into clear, concise insights?
of course. And I think like being a student of the industry, and understanding that you need to make a judgment call on where am I getting that information from. If you're hearing it from the guy that owns the milk bar that's never looked at investments previously, and you're taking information from someone like that, probably not the best information sources. But yeah, as I was saying, being a student of the industry, looking into a lot of professionals in the industry and seeing the content that people are putting out, the data that people are putting out, and things like that, we have access to that information, but uh, being to un, being able to identify and understand, okay, this is a reliable data source, and I suppose people that have done it previously had success. It's really important to be able to link in with people like that, and there's professionals in industries for reasons, and
Mm.
people have longevity within an industry for a reason as well. So I really think where we're getting our information from and how we're absorbing that information has become more important now more than ever, because we do have access to so much information, and there can be conflicting
Mm.
information that you receive as well. So just being able to identify who are the people that we'd like to listen to and the reasons to why we want to do that is super important in this day and age as well. So yeah, I'll go through a little bit about what we want to speak about today. As I said previously, creating positive cash flow in a high interest rate environment, now more important than ever. So we're going to touch on a few locations that we've been able to identify. We'll talk about a few case studies and things like that. So the duration of the presentation today probably takes around about 45 minutes, depending on a number of different questions that we may have and things like that as well. But we'll talk to you a little bit about our formula, the Reventon formula. And again, sort of going back to what we discussed previously, Tim, I understand people that have been in the industry for a long time have a number of different formulas, but ultimately, the crust of that is very similar with most professionals in an industry. And I was watching your webinar that you did with Terry. I think it was a couple months back, where you talked about the empirical formula
Yeah.
and the reasons to why you're selecting different properties and things like that. And again, that was really insightful for myself, and even being in the industry for as long as I have, understanding that there are certain factors to why we look at property investment, and
Mm.
there's certain reasons to why you identify specific areas and things like that as well. So our formula, pretty simple, Tim, pretty
Mhm.
similar to the formula that you guys are using there at Hotspotting, and obviously a reliable data source for us. And a lot of the research that you guys do helps us formulate areas for us to go in and have a look at as well. But what we also do here at Reventon, Tim, is not only research the information, but get out on the ground, have a look at the different areas, have a look at different developments that are happening
Yeah.
throughout that area.
I think that's a really good point, Zen. I mean, there's a million different buyers agents popping up all over the country at the moment, and I think it's really important that the people that are giving information, for people to act on, you really need to know where that's coming from, and has that person got the experience in market? Have they been there? Do they actually know what's happening on the ground there? And so many of them are doing it from a bedroom at home, recommending go and invest in that location. They've never been there before. They've got no boots on the ground. And I think that for most consumers, they deserve to have people that actually know that market intently.
And I understand that you are able to make some selections using that sort of formula as well, having obviously good property managers in the area, good relationships with
Yeah.
people and things like that. You can make some informed decisions using that formula. But I remember a conversation that we had a few years ago, Tim, when we were talking about buyers agents and buyers advocacy starting here in Australia, and obviously how that would be an industry that would be growing over the course of the next few years. And we've seen significant growth in that
Yeah.
area um, now, probably more than ever. Last night, I was speaking to a client who called me at about 8 o'clock in the evening, talking to me about a buyer's agent that recommended a property for them and wanted me to do some research into the area and things like that as well. But as I was saying previously, credible information from credible sources and doing the extra ticking of the boxes is really important
Mhm.
for anyone whenever they're making an investment choice as well. So just making sure that you're able to be comfortable with your decision, because looking at investments, it's something that can change your financial future, and making the right decisions could be the difference of hundreds of thousands of dollars. So I think it's really important to just make sure that you're using credible sources and verify information.
Yeah,
Speak to
absolutely.
people that are experts in an industry. Speak to people that have been there, done that, and uh, you feel comfortable that they're that your best interests align with their best interests as well. So you have to understand, within a property transaction, um, there there's always someone on the other end that's doing a sale, and someone on the other end of that sale. So what is the purpose of I suppose them talking to you about different areas, different locations? Is it something that aligns with your goals and visions? Is really important as well. So yeah, in this day and age, with access to so much information, I think it's really important to
Yeah.
check credible sources and make sure you're making the right decisions. Because, as I said previously, there's hundreds of thousands of dollars to gain from it, and um, but people make errors and mistakes. So you should always verify that information before making a big decision like property investment as well. So yeah, we'll talk a little bit about the Reventon formula. I'll go through a couple of the data insights on a few states that we'd like to cover off on today. Obviously, we only have 45 minutes, Tim, so we can't go across the country and have a look at all of the areas that we've been able to um, talk to our clients about. So I'm going to focus on a couple of states today. So the state of Queensland and the state of Western Australia, where we've done some significant business over the course of the last 12 to 24 months, and give you a few examples of some of the business that we've transacted in our buyers advocacy arm here at Reventon. We'll close off with just a special offer for all of our viewers today, Tim. If they're looking to get an opportunity to have a bit of a chat and a no obligation chat with myself, and I'll spend about 30, 45 minutes with individuals, just talking to them about the areas that we're looking at, get a bit of an understanding towards their appetite at looking at investments, and then be able to make some recommendations to um, myself and our sales team here at Reventon to be able to assist them on their investment journey as well.
Terrific.
No probs. So, Tim, we talk about the Reventon formula.
Yeah.
As I was saying previously, um, all all information and data needs to be verified. So it's important to have great sources that you're relying on to get that data from. And we're fortunate enough to be working with the team at Hotspotting for a number of years now, and they've been able to provide us with a number of different insights for us to then take further investigation into and speak to our clients about that. So that is obviously a huge part of what we do here at Reventon, and
Mhm.
verifying some of the information that we're receiving. SQM, obviously a lot of research is done through SQM. And I think collectively between those two data sources, the directors and the owners of those businesses have been involved in property for over 40 years. So that's a lot of data. It's a lot of research, and you would think a lot of information and a lot of experiences on great resources and things that I suppose that they don't want to pass on to the people because it may not be best suited to them as well. CoreLogic, another source of data that we use, probably a little bit behind in relation to its relevance and being able to pick things up immediately. But again, obviously a great reliable source, but maybe lagging a little bit in relation to how quick and how relevant and how much that data is updated as well. But like I said, SQM and Hotspotting, they really seem to be on top of getting data to people at a faster rate and more relevant data that is more current. So we're not.
Yeah, I think the key difference between your CoreLogic's SQMs and what we do is that they specialize in real estate data, whereas we bring in demographics, major projects, infrastructure, and local economy into the mix as well.
Yeah. Okay. So I think between those organisations and obviously industry experience that we have here at Reventon, it's something that we rely on when we're looking at property investment for our clients as well. So a few things that we look for, obviously economic growth and strength, very important when you're looking at property investment. Diverse employment into a location, obviously important as well. The amount of income that people are earning within specific areas as well. Resources and industry, so what's actually going into those areas, whether it's government spending, whether it's private development in area as well, is something that we look for. This one here, Tim, is probably one of the keys, and it has changed significantly as we spoke about at the start of the presentation. That's affordability. So with interest rates being as high as what they are now, affordability changes as well. So being able to find some high yielding investments has become more important than ever. So affordability, not only for the rental yield that it gets in, but also as the median house price has grown and interest rates have risen, people's capacities to be able to borrow, people's appetite to taking on debt does change. So affordability is something that's really important. And another factor that we look at, and a lot of people talk about this as one of the main factors. I don't see it as one of the main factors. I see it as one of the contributing factors is population growth. And the reason being is people need houses to stay in, whether they're purchasing them as first home buyers or whether they're purchasing them as investors and renting them out to new people in different states and territories. One of the factors that we look at is population growth and tourism into areas as well, Tim, which helps obviously with different revenues coming into different states and territories as well. So that there sort of makes up what we call PIDE. So population, industry, infrastructure, employment, and diversity. So those are some of the key factors that we look at when we're selecting properties across the country as well.
Yep.
So our formula and our sweet spot. So I'll talk a little bit about the national average of property prices. And last year across the board, it was around about 5%, 5.5% capital growth across the country. And just to give some of the statistics to our viewers about our growth in 2023 for people that were looking at property investment with the organisation, our organisation averaged 16% in capital growth, so almost 3 times what the national average was. And again, going back to what we were speaking about previously, Tim, having the right resources to pull from, getting boots on the ground, getting a good understanding of that is a major contributing factor to why our clients were able to see the success that they had in 2023. And with significant interest rate rises and things like that, still to have one part of the element that we're looking for, which is capital growth, at 16%. It was a testament to the research the organization had done, our research partners, as well as having people on the ground and giving us a good understanding. And not only myself do I get involved with heading out to different locations across the country. I've been really big on in the past few years, whilst I've been here at Reventon, is getting the guys out. And I know when we worked together, Tim, that was something that we did as well, headed out to different locations. And it wasn't just the person that was leading up the team that went out to those locations. He might have done in his initial searches and done that himself personally, but then taking out the consultants and giving them a great understanding to the reasons to why we're recommending areas for people to invest in, and getting them to understand the different questions that the clients are going to be having and things like that as well.
Yeah.
I think is really important because if they're at the cold face, they're meeting clients on a daily basis. They need to be comfortable. They need to be understand and have the knowledge to why we've made the decisions that we've made to move into specific areas and things like that as well. So it's something that I've been really big on here at Reventon, is making sure that we continued on with that, and we've done a lot of.
I think it's a really good point, Zane. I think these days now, there's so many different websites and research companies out there, or even property groups that are claim to have these incredible data portals that you can basically say, this is what I'm looking for, and there's a million different data points that will come out, and I'll say you should buy here. And I don't think I can. I think it's going to be a long time before I'm going to be able to trust a computer to tell me exactly where to buy. By all means, use computers to speed up the process, rule out places that you shouldn't buy, help you isolate locations that on paper look really good, but there's no way a computer will walk down the street, get an idea and a gut feeling of what's happening in that market more than you can by actually flying to an area or driving to an area and going through it, talking to local agents, talking to the community, and actually having a real gut feel. Computers can't do that. And I think that's a really good thing that I know Reventon is really proud about, that you are constantly jumping on a plane and shooting off and looking at these new markets, getting a good feel for these locations before recommending them to your client base. There's a lot of people out there that do buy based on the data. And I know as investors, we look at the numbers need to make sense, but there's nothing that you can't put a dollar on what it means to walk through a location and actually get a gut feel for it.
And I think, Tim, again, just to highlight some of the points that you've spoken about there, that's the difference between a real estate professional that will actually go the extra mile to make sure that, okay, I need to verify this data, I need to verify this information. And the best way for me to actually do it is boots on the ground and have a look at that. Absolutely. You can get a great idea from the data to areas that you want to look at. But anyone that's been in real estate for a long period of time will tell you that there's specific locations in specific suburbs that you will purchase in, the specific streets in specific suburbs that you want to avoid. So being on the ground and seeing that, there's nothing like that information. But obviously use the data and research that we have these days to narrow down the searches. But I think ultimately when
technology today is unbelievable. We can it's just there to speed up the process. That's what people should be using it for, but it's not a decision-making mechanism. It is a way to speed up the process, rule out all of the outliers that you shouldn't be looking at, and focus on the things that you should.
And as I said previously, I think a real estate professional understands that. And when you have when you're thinking about doing a transaction that we're talking about, median house prices now being so high, you're recommending something that makes a real difference to someone in their lives.
Yeah.
So going that extra mile is significant, and it also allows the client to understand that You are ticking all of the boxes when it comes to making a decision that can affect your financial future. It can affect your retirement, and it's important to know that the transaction is being made. It's not a one-sided transaction. Not one person has to gain from the transaction. I think when you're looking at property investment, and there's so many different organisations out there that do what we do, that talk to people about properties and so on and so forth. But having the client front of mind and understanding that this process can take some time, and I want to be clear, I want to be thorough, and I want to make the right decision for my client, is really important, and that is what I think allows someone to have longevity within an industry, and it's something that at Reventon, and something that myself and my family are really proud of. And I'm not saying that that every decision that we've made has been a fantastic decision that we may have made 15 or 20 years ago, but they're learnings. And from those learnings, you're then able to make better decisions. So I think if you're having the client front of mind, and understanding their goals and objectives, it's important to then mold the strategy based on those decisions as well. So we talk about our property pyramid, and this has changed in the time that I've been working in the industry. And that sweet spot where we're generally looking at, and where we're trying to get those yields of upwards of 6%, we find is in that sort of $450,000 to $700,000 mark. That's not saying that you cannot purchase a property below that mark. But again, if you are purchasing a property below that mark, you really need to then focus on the data and the statistics that have been presented to you before you make that decision as well, to why you're going to invest in something that is a bit lower than that sort of 450 mark, or if you're looking at something that is above that $700,000 mark. Again, you really need to scrutinise the reasons to why you would be investing in something like that as well. We think diversification is fantastic. So if you can stay within that sort of $450,000 to $700,000 mark, it will allow you to be able to duplicate probably at a faster rate as well. And obviously, when we're talking to our clients, we're talking about working with them throughout their working history, and the majority of the people that you speak to are looking to build a portfolio, looking to build some wealth for their retirement. And I don't necessarily think that one property is going to do that for people these days. So being able to diversify and look at a number of different locations at different times as well is really important. And as I said before, if you've had experience in the industry, you would have seen that 5 years ago there were specific spots that if you invested in, you made a great short-term return on within that sort of 2 to 5 years. Those areas may have sort of capped out at a specific price. You may decide, okay, well, I can now on-sell that, realize some of the profits for that, and then invest in a couple different properties now because of the growth that I've been able to make from that one property and the right decision that I made in that sense. So I think understanding that if you can work within that sweet spot, it just allows you to have a few more options for your investment journey as well. Okay, so as I said previously, Tim, a couple of the states that we want to focus on, and we've only got 45 minutes. And I thought when we started the presentation, Tim, I thought maybe we're a little bit light, but I should have remembered that when you and I sort of get talking about property, that we might be running over as opposed to under. So we'll get into some of the insights and some of the areas. So we've identified and believe that the top 50 suburbs in Australia with the yield of above 6% and a vacancy rate below 1%. So 27 of those suburbs have a vacancy rate of below 1% of those top 50 suburbs. So in these two states here, it makes up 25 of those 50 suburbs, just in the two states that we'll be talking about today. So in Western Australia, obviously south and north of the river in Western Australia as well. There are some areas in regional Western Australia that we've been looking at as well, where we've transacted some good business in as well. And over the page, looking at Queensland as well. in the last probably 12 to 24 months, we've been able to see some significant growth in some of the suburbs in Queensland as well. So I know you've had some great success with some people that you were talking to in relation to investments in that Queensland region, Tim. And I gather when you were looking at talking to clients about investing in those locations, it was backed with different research and understanding to why we're looking at properties in those areas as well. So a few of the locations in Queensland, obviously Atkinvale, Bundaberg, up in North Queensland as well, just near Townsville, some of the surrounding areas of Townsville. Kerwin has seen some fantastic growth, great rental yields in those areas as well. Maryborough and East Mackay, also just to name a few of those suburbs, and back into Western Australia, south and north, even heading out to some regional areas in Western Australia as well, such as Bunbury, Geraldton, but a lot of great locations. Still 20 to 40 minutes from Perth's CBD as well. Areas like the Midlands, Armidale, the Rockinghamshires, and things like that as well. We've been able to talk to clients about investments in those areas, and they've seen some substantial growth and great yields in the past 12 months as well. So, yeah,
Yeah.
just thought I'd.
I mean, Western Australia's economy's thriving. It's obviously a really robust resources sector. It's got significant government investment in infrastructure with a $1.8 billion women and children's hospital, $2.5 billion to the airport development. It's really undergoing significant urban renewal as well. Now, we've noticed a really big drop off in listing volumes over there in the last 12 months. They're almost 20% lower last month, according to PropTrack anyway. May 2024, we're down about 24% on listing volume in Western Australia, although prices are still, achieving well above, the listing range. So it's probably a reflection of that low vacancy rate and still high demand, that these low listings are still getting quite a good price.
I think like time, you talk about a place like Western Australia and looking traditionally at how long things are generally on the market for, ranging between, say, 30 to 60 days on the market. There was a stage there in WA where things were being listed and sold within 8 days,
Yeah.
which is unheard of in certain locations. And I
Yeah.
think it's driven obviously by affordability. People's capacities to be able to borrow has maybe changed. The climate in Western Australia, diverse economy, and things like that. Some of the things that we spoke about previously as well. So I'll touch on a few things just in relation to Queensland while we're in those discussions as well. So there's been a consistent buyer demand across the state, which has been driven by a broad and growing economy. So North Queensland, obviously a lot of large infrastructure projects being put into North Queensland as well. And with those infrastructure projects comes a lot of employment within an area as well, stability within that employment, being in a lot of government sectors as well. So that has obviously caused a great demand for properties in those areas. And I think the prices, the median house price in those areas was quite reasonable. And looking at different lifestyle amenities in places like Queensland, where I'm here in Vic, and I got up this morning. There was ice on the car, Tim, when I got to
Yeah.
work this morning. So we had to heat it up for a bit of time before we went up. But places like Queensland and WA not only offer great, I suppose, diverse economies, but also climate and affordable lifestyle is something
Yeah.
that attracts investors. And these days, with leasing, whether it's short-term leasing with Airbnb, long-term leasing, people are securing some good rental yields in those areas as well. So another key factor to why the market's been doing so well there as well. So the economy is creating more jobs, good amenities, train links and motorways, also a great thing for property investments and property prices, and also a low vacancy rates of below 1% in specific locations across the state is obviously causing demand to increase in the Queensland market as well.
Just before you jump onto Western Australia, I know a couple of those locations that you reeled off just before Zen in Queensland, a lot of them sort of appeared to be in that sort of Moreton Bay region. Obviously, it's one of the fastest growing locations in Australia. It's got a really strong local economy there. I think it's currently about 20 billion, but expected to double by 2040 to 40 billion. It's got major projects like a $400 million upgrade to the Caboolture Hospital. You've got a couple of $1 billion upgrade to that North Marina Harbour there as well. So lots of job creation happening in that area. And again, we've still got some medium price suburbs in the 500s, like high 500s. And certainly if you're going up to Bundaberg, you'll get them much cheaper than that. But tying it back to the topic of today, these are the sort of location you've got to get away from that Brisbane pocket down south and moving up into those locations to achieve positive cash flow. Is that where we're going?
Certainly is. And I'm actually highlighting that shire in one of our slides, Tim, and talking about obviously the increased demand for housing in that area as well. As we were talking about previously, population is one of the factors. People need places to stay, but obviously a lot of different other things go into play when it comes to yields, low vacancy rates, and capital growth and things like that as well. So, so I am a bit conscious of time, Tim. As I said, we didn't. When we started the presentation, we thought we've probably got about 30 minutes here, but I think we've probably been going for over 40 now, the way we've been going on. So I'll touch on some of the infrastructure and some of the data insights that we spoke about for Western Australia. Obviously, there's a major demand for first home buyers and investors in Western Australia, and there has been for the past 12 to 24 months. And myself personally, we've been doing a lot of business over there in Western Australia and seeing what's actually happened in the last 12 to 24 months. And we've had people seeing some fantastic capital growth in those areas as well. And we still believe that there are some legs in a lot of the Western Australian markets as well. And it's obviously a great local economy in the area. So it's diversified now as opposed to where it maybe was 5 or 10 years ago, where it was maybe solely or predominantly driven by its mining sector. Now there's a number of different other things driving that market as well. And markets are cyclical. And today we can be talking about Western Australia and Queensland, and in 6 months or in 12 months, we're going to be talking about other different states and territories and regions as well. But still in Western Australia, there is affordable housing options. There is major infrastructure being spent by the state and private and public infrastructure spend. So there's still good potential for capital growth, as we spoke about previously. And a lot of these locations near significant job zones and transport links, which is obviously helping the state as well. And we spoke about previously lifestyle that people are looking for, and a lot of the locations, especially the Bayside locations that are maybe 30 to 40 minutes south or north of Perth CBD, are offering great lifestyle amenities and a lot of job nodes within those areas as well. So that's some of the insights there on Queensland and Western Australia. I won't talk too much about a lot of the different infrastructure projects that are going on in those states, but as you can see, a large amount of infrastructure spend in both of those states. So major infrastructure projects in WA, over $27 billion in infrastructure projects, and in Queensland as well, over almost $14 billion in infrastructure spends as well. And not only in the major cities in those states, but we're now looking at major infrastructure spends in the different regions
as well.
Yeah. So, for example, obviously up in Queensland, Townsville, Bundaberg, there's a lot of infrastructure spend. We talk about Western Australia, we talk about Bunbury, we talk about the money being put into the port and things like that as well. So a lot of different a lot of different projects there, which are giving us ongoing jobs and obviously great capital growth, and also fantastic yields and really low vacancy rates in some of those areas as well. Population growth, as we spoke about, is one of the factors. I don't want to talk too much about this, Tim, to be honest, but the reason being it is one of the factors, but there's so many different factors that taken into consideration. But if we just have a look here at the numbers at the moment, so 5.5 million in Queensland at the moment. They're projected by 2041 to almost 7 million, so a 24% increase in population, which is significant. People need housing, and we've noted with population growing by almost 25% in a short period of time, that's a significant demand. And will in the next slide, we'll talk about the dwellings that they would need to create for that and the shortfall. And obviously, for people that have been involved in property and finance, and people that have been keeping their eyes on, I suppose, different building approvals, whether that be government approvals or whether it's private, in Australian mums and dads that are looking to get into the property market, they're just not they're not able to produce the amount of houses that are required for people. So, it's part of the reason to why the yields are shooting up that high, part of the reason to why people have an open for inspection and there's 30 to 60 people applying for rental properties. And we don't see that changing in the near future. And again, even looking at Western Australia, over 26% population growth is a significant amount. As we've seen with restraints on building companies, restraints on builders bringing product out, new laws and regulations that are added costs to different builders, so many different building companies, being forced to close up shop because of the rising cost of materials, obviously the shortage of labor and things like that as well. We don't see this changing in the next decade or two. So looking at areas where there will be a shortfall of homes is something that we're
Well, I think you've sort of hit the nail on the head, Zen, that, obviously with the amount of interest rate rises we've seen, banks were saying at the start of the interest rate rises that we're going to see property prices drop back 20%. And, in some locations that you've mentioned today, we've seen 30% growth in the last 12 months alone. So they didn't get it 20% wrong, they got it 50% wrong. But it's because the banks for a lot of time, the economists have been thinking that interest rates are the biggest influence on property prices, but there's far greater strengths at play here, like the shortfalls in homes and the lack of being able to build new homes, that is causing property prices to continue to skyrocket.
We've got record migration coming into the country, and it doesn't look like that's going to be curbed or stopped anytime soon. So that also is there's so many different factors that come into play when you look at, I suppose, the restraints on housing here in Australia. And to be perfectly honest, we're listening to economists and politicians and things like that. Most of the times they haven't got it right. And I know people that are in the property industry for a long period of time. They're generally not listening to that information before they're making informed decisions on where they're selecting properties and things like that as well. So you can take some of that information, as we were speaking about previously, take some of that information, but look at previous history. And that generally will give you a bit of an indication to, okay, well, wait a second, they've told us 10 things and 2 of the 10 have been right. So I'll take it all with a grain of salt. And we talk about the factors that are contributing to median house growth in those states that we spoke about. And this goes back to, for me personally, this goes back over 30 years ago when I was sitting in my economics class, and my teacher was talking to me about the supply and demand. And this is a clear sight of the difference between supply and demand. So just a couple of these shires that we'll talk about in WA. New residential dwellings in the city of Rockingham. So we've been investing heavily in the past 2 years in the city of Rockingham and also in the city of Wanneroo. Residential dwelling approvals were at 1,278 for the fin year in 2023. So in dwellings, there was 54,000 dwellings in 2021, and the forecast dwellings required for 2046 was 90,000. So 35,000 shortfall is a significant amount. And if we head over into the north, again, in the city of Wanneroo, something that's 30, 40 minutes away from Perth's CBD, a lot of infrastructure spent being put in there, government roads, train, rail, hospitals, so many different things, private, public spend. We look at residential dwellings in 2023, 1,516 new residential dwellings were approved. And in total, in 2021, in that shire, there was 78,000 homes. And they forecast that they will require in 2046 167,000. So there's a shortfall of 89,000 homes in that period of time. And to meet the demand, they need to build over 3,500 homes.
Per annum.
1,500 in the year of 23 that have been approved. And in, say, for example, we talk about Western Australia as a state that had seen a lot of new homes being built in a lot of those regions, and they were building 1,500 in just that shire there. But they really, the demand that they need is 3,500. So you can imagine, obviously, looking into that there'll be a big, there's going to be more restraint on rental, and what that does, it just brings prices up. So we
better quickly fly through the Queensland ones, just because we've got a couple of questions in there that I want to get to before we wrap it up.
Probs. So we will share the presentation with our viewers, so they'll have an opportunity to sort of go through that themselves. So I'll just quickly touch on Moreton Bay, and we did speak about that previously in the presentation. Tim, you were able to sort of touch on that, and you guys were obviously bullish about that area as well. And a lot of property analysts are bullish on that Moreton Bay area. And if you look at the statistics and you look at the dwelling shortfall in that area, you can see that almost 2,000 shortfall per annum is significant as well. So again, as I said, we'll share the presentation with our viewers. I hope they're able to get a little bit out of that. I'll just quickly touch base on a couple of the deals that we've done in the past 12 months in those states as well. So something that we did 12 months ago in the state of Western Australia, it was actually in a suburb of Armidale, which is south of Perth CBD, about 40 minutes south of Perth CBD. We purchased a property at $410,000 in May 23 for one of our clients. Rental yield of over $600 per week, so over 6% in yield, so 6.3% in yield. Current valuation on the property as of June 2024 was $510,000, so uplift of $100,000 in one of those locations that we were speaking about previously. Significant uplift in 12 months, considering that the average is about 5.5% across the country. For this example, it was over at 24% in 12 months. So great success story from one of our buyers advocates here at Reventon. And back into Queensland. This is in North Queensland. We were working in an area, Bedell, which is about 20 minutes away from Townsville. And we had some fantastic success stories in that suburb of Bedell as well. So purchased in November 23 for $420,000, a yield of 6%, so $550 per week. Current valuation on that property at $475, so 55% uplift in just 7 months.
Yeah, I mean, if you capitalize that over the 12 months, you're up over 20%, aren't you?
Yep. So again, as I was saying, data and research is really important, but all of these locations here, we spent time on the ground. So myself and the sales team, we spent a significant amount of time in North Queensland. We spent a significant amount of time last year in Western Australia, and we'll continue to do so while we're talking about investments in different states. And we operate here out of Victoria. So when we're talking about investments in different states, we'll continue to do what we've been doing previously and making sure that we're on the ground and having a look at what's going on with us as well.
Very good. All right, so we've got quite a lot of questions here, Zen. I'll pick out a couple which will be useful for you, and then I might try to wrap up a couple of them really quickly with a bit of a tool that they can find these answers out quicker. So the first one is, firstly, thanks for the webinar. If an investment property is or becomes positively geared, what would be your recommendation? Use the positive cash flow to purchase another investment property to rent as a negatively geared property, or use the positive cash flow and income to upgrade your current place of residence? Have you got a view on that?
I certainly do. And I think, again, sort of going back to what we spoke about, that it's never a one size fits all. So that would be a discussion that you would need to have with a family member. And if there was required upgrades to your primary place of residence, are those upgrades more important for you than investing further with your wealth creation? That's a decision that you'd need to make with your spouse or partner at the time. But myself personally, I believe if you're in a union with someone, it needs to be a happy union. So find that happy medium between both. I'm always
I think it's important. Is it a maintenance item, or is it going to add value to the property and things as well? That's another consideration. But how much you're likely to spend on your owner occupier versus if you were to put that money into another investment, is the money spent on the home going to outperform the sort of growth you get on another investment? That's the balancing act.
Of course. And myself personally,
you really need to nut out the exact numbers to give you a proper answer on that.
Myself personally, I'm always bullish about building portfolio. So I think with consultation with your family, that you can make those informed decisions yourself as well.
There's another question here. How do you ensure you're getting a nuanced view of a market from a local real estate agent rather than a sales pitch? It's probably a question or a comment made on a comment I made earlier in the presentation today about speaking to agents on the ground. And I suppose this is the difference between speaking to sales agents and speaking to property managers. So, for good property buyers agents or investment specialists, we would typically have boots on the ground in each location that we're recommending to people. And it would usually be getting advice from the property managers. So tell us, what sort of tenants can we inspect in here? Could you go through and do a video walkthrough of that property if it's established, obviously, and tell me, what sort of tenants can I expect? Is this a good pocket in that location? All of those types of questions. And typically it's usually when the property managers, we get a better insight. So I hope that answers that question.
The information is really important. So understanding the questions that are required to get that information for you to make an informed decision is something that, if you don't believe you have the insights in doing that, then use a trained professional to do that. So if I'm looking for a maximum tax saving, I'm going to a trained professional to actually do that for me. So I think it's the same in all senses when you're looking to do something like that.
Yeah. We've got a lot of questions here about different markets, and we obviously don't have a lot of time to cover them all off. But what I can say to people is this Friday, Hotspotting is releasing a brand new research hub for all of our members. So if you're already a member, you will get access to this new research hub for free. Anybody who's not a member, I recommend you jump on and have a look. Even at the lowest level, a Hotspotters membership of $299 a year will get you access to this new research hub. And it will not only give you all of the real estate data that you need for every suburb in Australia, we're now including our price predictor index on every single location as well. So you can actually jump in, search any suburb in Australia. It'll tell you whether it's a rising, declining market based on sales activity. We also have a flame system as far as how hot that market it is. So all of these questions in there about what about this location, that location. If you jump in and become a member at Hotspotting by Friday, you'll be able to get all of those questions answered at the click of a button.
So Tim, thank you very much for your time today. I really appreciate you hosting the webinar with us today. And just to touch on, I suppose, some of the reports and the things that Hotspotting has been providing for us, so that's been amazing and helpful information for us as real estate professionals. So yeah, definitely recommend that when using resources for property, make sure that you use the right resources.
That's it. All right, mate. Lovely to have a chat with you today. Thank you all for joining us, and we'll hope to see you all again soon.
Thanks, Tim. Appreciate your time.